Hello and welcome. I'm Craig Harrington, and today's topic is selling off America. America is up for sale. From 1978 to 2008, America sold nearly 17,000 of its best companies to foreign investors, allowing the profits and technological secrets in those industries to benefit foreign ownership. America's trading competitors, on the other hand, do all that they can to protect their own key industries by any means necessary. Perhaps the best example of this is Japan. Japan has just a fraction of the size of the United States in terms of landmass, and possesses virtually no resources essential and vital to manufacturing. Yet Japan has one of the most robust and productive economies in the world, an economy which could one day knock off the United States as the world's largest. The Japanese have used investment barriers to protect their own industries from foreign direct investment. The government uses strict controls to limit the amount of foreign investment that goes into Japanese companies. These measures were originally motivated by their own desire to prevent Americans from gaining an ownership of the Japanese economy, and in that regard, the Japanese have been incredibly successful. In the late 1980s, billionaire American investor T. Boone Pickens was prevented from acquiring a seat on the board of Japanese-based Koito Company, despite becoming that company's largest single shareholder. One of the other ways in which the Japanese prevent hostile takeovers is by utilizing a system of cross-holdings. In cross-holdings, all Japanese companies hold stock in other Japanese companies, which makes it nearly impossible for any one to gain a controlling interest, even if that one is an American investment billionaire. This also promotes a stable business environment, as a strong economy benefits everyone for mutual gain. Japan also uses rigorous standards, testing procedures, and government procurement policies to keep the flow of foreign investment and manufactured imports at a trickle. These informal trade barriers have caused an uproar among Japan's trading partners, but little action has been taken against that nation because these policies, though illegal, are hard to document. The practice of preventing hostile takeovers in Japan was copied and implemented by the Chinese. Last September, Coca-Cola Company offered to buy Huyan Juice Company for approximately $2.4 billion. The acquisition would have been the largest foreign takeover of a Chinese company in that country's history. However, the Minister of Commerce rejected the takeover bid in March, citing antiquated antitrust laws, which barely applied to this case. China's move to block the acquisition is just the latest example of China's own double standard on foreign direct investment. And this is a double standard shared by many of America's trade competitors around the world. China has been using the global recession to acquire beleaguered companies and assets around the world, particularly in the United States. Yet when an American company attempts to buy a Chinese company, the deal is scuttled based on some arbitrary law or restriction. Protectionism is utilized effectively in one form or another by hundreds of countries around the world. Yet when a measure thought to restrict trade in America is considered, foreign governments, economists, and even American businesses cry foul. There seem to be no repercussions for Japan's protectionist measures, but there definitely are for Americans. Americans need to stop thinking that protectionism is a four-letter word and recognize that it can be utilized to keep Americans safe from toxic products, prevent the outsourcing of American jobs, and prevent the liquidation of American companies. On behalf of concerned citizens, I'm Craig Harrington. For more on this and other related topics, log on to economyincrisis.org.
Wake up, America! Open up your eyes! Wake up, America! Wake up!
Produced by economyincrisis.org.